minus the dividend or the distributions to the owners. So you can find out retained earning. Or in equation, you can say that retained earning is equal to revenue or sales minus expenses minus distribution of the income to the owner, which is dividend. So this is also the formula for retained earning. Here we go. Point. So revenue, these are called the inflows of resources. Revenue, sales, and you sell the goods, the cash is coming into your business. So we call this cash inflow or inflow of resources, right? So revenue is inflow of resources. Expense is if you pay money for the services or pay money for the raw material, right? It means money is going out of the business. Means this is resource outflow that decreases the retained earnings. So that's why revenue minus expenses minus dividend, which is distribution to shareholders or owners generated by the income, right? So you see the word is income there, but here we don't see any income. Why? Because net income can be calculated as sales minus all expenses is your income. And that income belongs to stockholders, right? So for example, 50% you distribute it, so that 50% become dividend and 50% left is called retained earning that would be added here. Understand? So as your formula states that retained earning is equal to revenue minus expense minus dividend. So which increases the retained earning? Revenue. If revenue increase, retained earning increase. When retained earning increase, retained earning belong to owner's equity. Owner's equity increase. Right guys? Pay close attention. So owner's equity increases. What can be the reason? Because, okay, let me give you the example on a plain screen. So we know that assets, accounting question in assets is equal to, sorry guys, liabilities plus owner's equity. Owner's equity consists of paid in capital and retained earning. Owner equity can be increased because this is a plus sign here. Owner's equity can be increased either paid in capital increase or either retained earning increase, right? So the retained earnings consist of revenue minus expenses minus dividend. So if revenue increase, your retained earning increase, right guys? If expenses increase, what will happen? Retained earning will increase or decrease?
Increase.
Retained earning, if
decrease because you make less dividend, so you cannot share.
Kathleen, see the formula here. Retained earning is equal to,
Sorry, it's expenses and dividends decrease. Okay, no, I got confused. Sorry. Yeah, it's retained earning increases when expenses and dividends decrease.
yes, because it's a minus sign. So you can put hypothetical figure here. For example, 100. 1, right? The answer is 100, right? So if expenses increase mean expenses are not 20. What happened to the retained earnings? Retained earnings are now how much? 95. It means if expenses increases from 15 to 20, your retained earnings now decrease. So that's why if expenses increase, retained earning decrease. A similar concept is with the dividend. If dividend increases, if dividend increase to from 5 to 15, answer would be 85. It means if dividend increase, retained earning decrease, right? So now that relationship with the explain or connect that relationship with the honors equity. If revenue increase mean retained earning increase mean honors equity increase, right guys? If expenses increase, retained earning decrease. When retained earning decrease, it means honors equity decrease. What about the dividend? If dividend increase, if dividend increase, it causes retained earning to decrease, causes honors equity to decrease, or vice versa, right? So revenue increases causes increase in honors equity, or vice versa. If we decrease the expenses, then our retained earning increase, our honor equity increases. If we decreases our dividend, our retained earning increases. Our retained earning increases mean our honors equity increases, right guys? Understand? So revenue increase causes increase in retained earning. Expenses decreases causes increase in retained earning. Dividend decreases causes increase in retained earning. When retained earning is increased, honors equity also increases. Right guys? Florian, Ali, Kathleen, Dijodi, Fabian,
Yes.
Yeah, understood.
Yes, sir.
Lota,
Yes.
Floyd, and
Yes.
Song. This is very important concept. Okay, guys? Okay, let's move forward. So this is basically the flow chart, the diagram of the retained earnings. So we know that retained earning is equal to, wow, it's a big gap between equal. Okay, let me write on here. Retained earning is equal to the revenue. Retained earning is equal to revenue minus expenses minus dividend, right? Now the concept of opening retained earning and ending retained earning. So you are making the financial statements, right? So there are some retained earnings that business retained and did not distribute to its owners in previous years. So it doesn't mean that this year profit you didn't distribute. Maybe you need $1 million, right? But your profit is, for example, 500,000. And you say that, okay, in 2 years, we would be needing $1 million to replace our equipment. So this year, we have a profit, year one, 500,000, and next year profit is also you estimate that, okay, 500,000. So in 2 years, you can get this 100, or sorry, $1 million. And in 2 years, you can replace that equipment or you can expand the business. So it means in previous year, there is retained earning year 1 and retained earning year 2. When you calculate that, so you will get $1 million, right? So it means in owner's equity, assets is equal to liabilities plus owner's equity. Owner's equity consists of paid in plus retained earning. Now let me raise it. Retained earnings, right? Right now, retained earnings from in current account in its position, for example, this is year 1, we have 500,000. So this year, your sales are 1 million, your expenses are 500,000. So your income is 500,000. And you did not distribute it, so your dividend is 0. So your retained earning this year is 500,000. So you add it this year so that you can, so this is year 1, now this is year 2. So year 1 plus year 2 will become the 1 million that you required. Right, guys? So it means the beginning year retained earning is the balance that is coming from previous years retained incomes, retained earning or not distributing earnings. And how we calculate the ending? So you add this period. Let me just erase all. Can we erase all here? Yes. So this year, so this is retained earning from the beginning. So retained earning beginning balance or opening balance plus this year retained earning, you calculate like this through formula. Retained earning is equal to revenue minus expenses minus dividend, right? And you add it in the retained earning beginning, you find out retained earning closing or retained earning ending balance, opening balance, ending balance, beginning balance or ending balance. Understand, guys?